Hi guys, welcome to CA Inter Financial Management MCQs. I am CA Anuj Jalota. We are on a mission to be doing every possible MCQ. And now from the subject of financial management, we have already done that for costing, we have already done that for CA final SCPM, and we are now doing that thing for financial management. The chapter that we all have selected today is called as leverage. Leverage means risk. And risk in a business basically comes because of fixed costs. Let's start it off with today's question. Just before I start, one small thing. All our lectures of CA Inter Costing are already there on our YouTube channel, and more we all are putting complete lectures on every Saturday, Sunday. Okay, these are complete lectures by every standard, whereby you get your soft copy of the book. You get every question solved by me in English, Hindi language mixed. Okay, once all that course is over, we'll start away with only English lectures also. Okay. You get ranking of every question, the summary of every question up and so on. Now, these lectures are there from a previous batch in case you want to enroll for the current batch. Okay, again in English, Hindi for the time being. Then you all can speak to us on 8080324444. They'll guide you further. Okay. Let's start it off with today's question. Operating leverage is a function of which of the following factors? Okay, bring me the four options first. First one, amount of variable cost. Okay. Second, variable contribution margin. Okay. Third one, volume of purchases. And lastly, amount of semi-variable cost. Now, first of all, what do you mean by operating leverage? Operating leverage means risk. Risk arises due to operating fixed cost. That kind of the risk is going to be called as operating leverage. Operating fixed cost, something that you incur in the normal course of business whenever you are manufacturing and selling. Popular examples could be, say, the salaries that you all pay, rentals that you all incur, or something like, say, non-cash expense like depreciation also. All these expenses remain fixed. Do remember, whenever there's a fixed cost, risk comes because you got to be earning enough amount of contribution to be meeting these kind of fixed costs. In case you do not, okay, then there will be a loss. If from my current explanation you all have got the answer, please comment below just now. Let's start off with the explanation. Now, operating leverage. Operating leverage will measure operating risk of a business. Operating risk can also be called as business risk. Every leverage basically has only one definition or one formula. Leverage is percentage change in dependent variable divided by percentage change in independent variable. Now, in this case, in reference to operating fixed cost, basically, your dependent variable will be EBIT because that comes after your operating fixed cost, and sales comes right in the beginning. So therefore, that's the independent variable. Now, this formula can be further converted into this form, that is contribution upon EBIT. So do remember that operating leverage does depend upon basically two things. One of them is contribution and other of them is EBIT. And EBIT will depend upon operating fixed cost. So therefore, there are two things actually. Operating leverage depends upon contribution and operating fixed cost. I'll go back to the question. Operating leverage is a function of which of the following factors? Amount of variable cost. Okay. It does not depend upon only the variable cost. C1, volume of purchases. Now, purchases is not the only thing, beta. Purchases is one of the variable costs. There will be direct labor, other things also. D, amount of semi-variable cost. We don't try to be considering semi-variable cost in this kind of an analysis. We assume that every cost is either fixed or variable. So, I guess so based upon the four answers, no, the most probable answer is looking like B, that is variable contribution margin. See, your operating leverage is contribution upon EBIT. So therefore, contribution is one thing that is there only in part B of the question, to be honest. Okay. And then there is EBIT. EBIT will be dependent upon operating fixed cost. So therefore, actually in part B, no, those guys should have written variable contribution margin and amount of operating fixed cost. That would have been far better answer. Okay. But in absence of that, I guess B is the only option that I can try to be circling right now. So please circle option number B. That should be the correct answer. That is the correct answer. That's it from my side for today. I'm making an attempt to be repeating everything in every question. So therefore, even if any student is watching any lecture for the first time, it is easier for that student to be understanding the context of the entire question. Okay, that's it from my side. In case you want to be watching every possible question that we all have put so far, every possible question, okay, then you can scan this QR code. This will take you a playlist. This will take you to a playlist that has every possible question of entire financial management. That's it from my side. I'll see you all next time in another lecture. Till then, take care. Bye.